look at the kind of volume spurt that you've seen on BHEL, it's almost 9 million shares traded. So that's way higher than the 10-day average on BHEL. And that really explains the kind of heightened activity that you're seeing in the stock after its earnings. Amit Mahawar, Associate Director, Wholesale Capital Markets at Edelweiss as well, joins in. Amit, hi. Your first take on what could have led to this dismal performance from BHEL?
Hi. I think it's mainly the slowing order book and the slowing traction in the utilities market, both across private and public sector clients for BHEL. So while the order book is been down in double digits, the turnover accretion is not happening. So on ground execution is getting delayed. Clients are facing liquidity issues, and the demand overall in terms of the utility segment also is pretty bleak. So that has been impacting the turnover of BHEL, and I think the numbers today are also bad, led by a very sharp negative operating deleverage. If you see, the margins are around 4.6% versus 13% expected.
Amit, now sales are down by only 15%. That is on expected lines. But the margin dip is the big surprise. Margins have contracted by about 10% on a year-on-year basis. Typically, margins, they come down when company takes a hit or company drops the prices. So what's the story? What is the big story where margins have dropped?
I think in last 1 decade plus, if you see, BHEL has not seen this kind of turnover decline. I'll simply say that the utilization level at plant level, factory level for BHEL is pretty low, and the fixed cost curve of BHEL is pretty high. So that is impacting the profitability of the company in a very simple statement. I don't think you can still say that the impact of price decline in boiler market is visible in result. It is more because of the low volumes that BHEL is facing, and that coupled with the very high fixed cost base of BHEL, which is difficult for them to control.
Okay.
Amit, the stock has really been all over the place. I mean, it had a tentative sort of session up until now, was marginally in the green, took a huge nosedive, was down 2%, and again the stock is now beginning to inch up in the green at 142. What's the call on the stock price now? Is all the negative in the price, and does it become a buy right now?
See, honestly, it's difficult for me to give a quarterly view or 1 2 day view. I can still say that on a 12-month basis, I have a target price of 105. We are negative on the stock, and we believe that the current recent run-up in the stock is more driven by expectation that government is doing something in the power utility market. Overall, I think broadly, if you see in terms of next 1 year. 1 to 2 years, we still remain pretty negative on BHEL. We believe the company will still get impacted in terms of overall order intake, overall plant utilization level, and the profitability will remain bad for the company.
But Amit, look at the other side. Whatever could go wrong has gone wrong for BHEL. Margins have already contracted from 17-18% to about 4%. They are sitting on a huge operating leverage. If things turned around for the economy, BHEL would be the biggest beneficiary. So for those who plan to buy BHEL now, they're pretty much buying it at the bottom of the curve.
So to answer the question, I can say that if the power equipment market on a recurring basis comes back to around 25,000, 28,000 megawatts plus annually, that is one scenario where we'll start reviewing our BHEL call, and I think that's entirely impossible unless the private sector utility market comes back, which is clearly missing today. I think that's the largest derivative change for BHEL that is expected, but I don't expect that to improve in the near term.
Amit, really appreciate you taking the time out and speaking with us. Perhaps the only silver lining to BHEL's horrible performance has been that sequentially the numbers have come in a little bit better. Sure enough, you haven't